Hey everyone, welcome back to Corporate Decoder. Today we're diving into a filing that might sound boring at first, but trust me, it's got some financial twists and turns. It's like watching a magician pull rabbits out of a hat, and only instead of rabbits, it's shares of stock. We're looking at a report from Metagenomi, a company focused on gene editing. Gene editing is like using molecular scissors to precisely cut and paste DNA, potentially curing diseases. This report is a Form 8K which companies file to announce major events to investors. The big news is that Metagenomi has entered into an agreement to sell up to $75 million worth of its common stock. This is like a company deciding to sell a chunk of itself to raise money. They're doing this through something called an at-the-market offering. An at-the-market offering means they'll be selling the shares directly on the stock market, like Nasdaq. This is different from a traditional offering where the company hires bankers to find big investors. It's more like putting the shares on sale a little at a time. Now, the company isn't obligated to sell all $75 million worth of stock, and the agent selling the stock, Jefferies, isn't required to sell a specific amount either. It's more of an, if we need the money, we can sell some shares kind of deal. Either side can stop the offering if they want to. For every share sold, Jefferies gets a commission of up to 3%. This is like a sales commission. So if they sell $100 worth of stock, Jefferies gets $3. The company also agrees to protect Jefferies from certain legal liabilities. The company attached the full legal agreement for everyone to see. This is a pretty common practice. So what does this mean for Metagenomi? Well, on one hand, it gives them flexibility to raise money as needed. Think of it like having a credit line they can tap into. On the other hand, selling more stock can dilute the value of existing shares. This means each share represents a smaller piece of the company. Is this a good move? It stands. If Metagenomi needs the money to fund important research or expand its operations, it could be a smart move. But if they're doing it because they're running out of cash, it could be a sign of trouble. Here's my take. Metagenomi is in a hot field, gene editing, but it's also a risky field. These companies need a lot of cash to fund research and development. The good thing here is that they now have some more flexibility, but the risk is that each existing share is now worth a bit less. Overall, the company seems to be taking steps to secure its financial future, but there are definitely some risks to watch out for. That's all for today's Corporate Decoder. If you enjoyed this analysis, be sure to like, comment, and subscribe for more deep dives into the world of corporate filings. Thanks for watching.